Okay, let's continue our chapter. Dissolution. You have any doubt to be asked?
No, ma'am.
Okay, dear, fine. So take page number 4. Dissolution of partnership, page number 4. Taken?
Yes, ma'am.
Yeah. See, note if there is no WCR and there is a claim for certain amount. For example, when you read the question, you find that in adjustment they are saying that there is a claim for suppose 1000 rupees, workman compensation claim for 1000. But in balance sheet you don't find liability side any reserve anything. So what to do? How you will do? So you have to pass this entry, realization account debit to bank account, claim payment entry, that's all. Only claim payment entry you have to pass, realization account debit to bank account. If there is nothing in the balance sheet and only in adjustment they are saying that there is a claim for certain amount for workman compensation. Understood?
Yes, ma'am.
Yeah, because previously what we used to do, I told you the 4 cases, right? In all those 4 cases, we have that reserve in our liability side, and in adjustment the claim is given, so we did accordingly. This is a special case where nothing will be given in the liability side of the balance sheet in your question, like no reserve will be created, but there will be some claim for workmen. For that only you have to show the payment, nothing else. Now next, treatment of investment fluctuation reserve, IFR. IFR equal to 40,000 liability side. So in the liability side of balance sheet, IFR equals to 40,000 given in your question balance sheet. Now again there will be 2 cases for this. Case 1, if investment is not given in assets. So when you see the balance sheet in your question, asset side of the balance sheet, you see that investment is not given. Distribute among partners. So, but when you see the liability side investment fluctuation fund is given, asset side investment is not given. So, whatever investment fluctuation fund or reserve is there, you have to directly distribute among partners. So, now what will be the journal entry for that? Investment fluctuation reserve account debit to partners capital account in old ratio. When investment is not given in asset side, then you have to distribute among partners in old ratio. Understood what is the first case?
Yes, ma'am.
Now the second case. If investment is given in asset side, suppose when you see the balance sheet in the asset side of the balance sheet in your question, investment is given, some amount of investment is given. Then what you will do? Then brought it down as liability. Then that investment fluctuation reserve, whatever is given in liability side and investment is given in asset side, then you have to treat investment fluctuation reserve as other liability. You cannot distribute among partners. So you should be very clear. You should, whenever you start doing the question, first see if IFR is given. What you have to see, if IFR is given in the liability side of the balance sheet, immediately see whether in asset side any investment amount is given. If not, distribute among the partners. That's all you have to do. Suppose the second case, you are saying that investment is also given asset side, IFR is also given liability side. Nothing to do, you can't distribute anything. Just investment you will show as other assets, you will transfer to realization account. Okay, debit side you will transfer the investment, and IFR like other liabilities you will transfer in the credit side of realization account. That's all. This 2 treatment only for IFR. It depends on the question which case is given. Understood?
Yes, ma'am.
Yeah, I hope you have written these two cases, right?
Yes, ma'am.
Yeah. Now again, very important concept, that is realization expenses. Very important concept in dissolution. So see, very easy also if you understand this realization expenses. Kindly write it down, one small note what I am telling you. It will help you a lot while doing the sums related to realization expenses. Always which account you have to debit? See, whoever is bearing realization expenses, you have to debit that account. Now what I mean by whoever is bearing, see, there will be only among two person who will bear the realization expense. One, the business itself will bear the realization expense, the other partner. So either firm or partner will bear the realization expense. Suppose firm is bearing or bond, bear, all means the same. So if firm is bearing or bond the realization expenses, then you have to debit realization account. Suppose any partner is bearing ABC, suppose three partner, question says A bears the realization expense, question tells you. So now partner is bearing, so you will debit partner's capital account, A's capital account debit. So first concept is you have to see, you have to read and understand who is bearing realization expense. Kindly write it down. Suppose partner is bearing, you have to debit partner's capital account. Suppose firm is bearing, if nothing is given in your question, when you read the question does not tell you, question is silent, whether partner is bearing or firm is bearing. That type of question also you will come across. So what you have to assume? Always whenever question is silent, question doesn't tell you who is bearing, you have to assume firm is bearing. So always you have to debit realization expense, realization account debit. If any partner bears, that also question will tell you A bears realization expense, B bears realization expense. So in that case, partner's capital account you have to debit. So first concept is clear to you. Whoever is bearing, you have to debit their account.
Yes, ma'am.
Now the second concept. Now what about the credit? Because every debit has its corresponding credit. Only by debiting you can't leave. Now the second concept, very easy. Whoever is paying realization expense, their account should be credited. Now what I mean by paying? Everything will be given in your question. Suppose the business is paying the realization expense, then you have to credit cash account. Kindly write it down. Suppose business is paying realization expense, you have to credit cash account. Cash balance of the business will get decreased if business is paying the realization expense. Sometime any partner may make the payment. So if any partner is paying realization expenses, then partner's capital account will be credited. So very simple concept. Just only two, either of one will bear or pay, and it is not necessary always business will bear and business will make the payment. Sometime business will bear the expense, partner will pay. Sometime partner will bear the expense, firm will pay. So just be clear in your mind, whoever is bearing, their account should be debited, because for firm we always denote realization account. So if firm is bearing realization expenses, you have to always debit realization account. Suppose any partner is bearing realization expenses, you have to debit partner's capital account. Same rule applies for payment of realization expenses. If business is making the payment of realization expenses, you have to credit cash account to cash account. Suppose any partner, he is making payment of realization expenses, then to partners capital account. This should be very clear in your mind. And after reading the question, you should understand who is bearing, who is paying. It is not necessary every time the same thing will come. They may differ. One more important concept. Suppose when you read the question and you come to know that any partner, he is bearing and he is paying the realization expenses. By reading the question you came to know, okay, particular partner, suppose A is bearing the realization expenses and A is himself or herself making the payment. In that case, no entry. You have to write no entry. You should not leave blank. You should write no entry for realization expenses, because it will be cancelled. Suppose A is a partner who is bearing. So what I told you, the concept, whoever is bearing, you have to debit. So partner is bearing, so A is capital account debit. 2, whoever is paying, partner is paying, so 2A is capital. So debit credit will get cancelled, nothing will be there. So remember, whenever a particular or any partner is bearing the realization expense and paying the realization expense, there will be no entry. But you have to write no entry. In dissolution, maximum they will ask that journal entry, or they will ask you to prepare realization account. Anything they may ask. So if they are asking you to pass journal entry, in that case, if realization expenses comes and this is the case, then you have to write no entry for realization expenses. You have to write. You can't leave blank, then teacher will cut your marks. You have to write no entry. That you should write. Now you got it. Yes, Pavitra?
Yes, ma'am.
You wrote everything now? For your understanding,
Yes.
I am telling you. Okay.
Yes, ma'am.
Okay, dear. Okay, fine. So, suppose we will see case 1. Born by firm. Okay, if born by firm, born, bear, all are same meaning. So, born, bear by firm means which account you will debit? You will debit realization account. Okay. Born by firm, paid by firm. So, born by firm, you have to debit realization account. Paid by firm, you have to credit bank account to bank account. Born by firm and paid by firm. Write the first case. First case, you can make your own notes. You can write like first case and you can write born by firm and paid by firm. You can write in that way and pass the journal entry. Realization account debit to bank account. Narration, you can write born by firm and paid by firm. In this way you can write. No need to copy my notes. In these situations you can make your own notes. Done, dear? First case you did?
Yes, ma'am.
Okay. Now we are moving to the second case. In second case, born by partner. Okay, born by partner means suppose any. Okay, the first case one more we will do. First case there will be two cases in first. First we did born by firm and paid by firm. Second, born by firm, paid by partner. Okay, you can write it down the second case. Born by firm and paid by partner. Write it down the heading. Born by firm and paid by partner. Then you have what entry you will pass? Born by firm means always realization account will be debited. Firm's account is realization account. Paid by partner means two partners capital account. So born by firm and paid by partner, what will be the entry? Realization account debit to partner's capital account. Whoever partner is making the payment, their capital account will be credited. Born by firm and paid by partner. Done?
1 second.
Okay, I will give you. Take your own time. Write it down clearly.
Done, ma'am.
Yeah. Now suppose born by partner and paid by firm. Suppose born by partner and paid by firm. So born by partner, you will debit partner's capital account. Then what I said, paid by firm. Then you have to credit cash account. Whenever firm is making payment, you have to credit cash account. Whenever partner is making payment, you have to credit partner's capital account. So what I said, born by partner and paid by firm. You can write it down. Born by partner and paid by firm. In this case, journal entry will be born by partner, so partner's capital account debit, paid by firm, so to cash account. In this way, you have to pass the entry. Yes, understood. Born by partner and paid by firm.
Yes, ma'am.
Yeah. Suppose born by partner, paid by partner, no entry. You have to write NO, no ENTRY entry. You have to write it down, no entry. There will be no entry. Will be cancelled. Debit, credit, both will be cancelled. There will be no entry. But that no entry you have to write. Now important note. If nothing is mentioned, only realization expenses are written, then journal entry will be, it is always assumed that expenses are borne and paid by the firm. Realization account debit to bank account, as I told you. When you read the question, it is not clearly mentioned who is bearing, who is making the payment, nothing. Then you have to assume business is bearing the expense, business is making the payment. So then if business is bearing the expense, realization account debit to, if business is making the payment, to cash account or bank account. That entry you have to pass. I hope till here it's clear.
Yes, ma'am.
Okay. If you have any doubt, kindly ask me, dear. Okay.
Sure, ma'am.
Yeah. Now important questions. Page number 7. Following is the balance sheet of D, G and T as at 29 Feb 2020. One more important concept. Suppose any partner is giving loan to the business or any partner is taking loan from the business. Suppose any partner is giving loan to the business, that you can see in the liability side of the balance sheet in your question. Suppose any partner has taken loan from the business, that you can find in the asset side of the balance sheet in your question. You can find. You can see the name of the partner, and by seeing the side liability or asset, you can understand partner has taken loan or partner has given loan. That's all. This concept first you have to understand. Then what to do? If any partner given loan or taken loan, that will never come in realization account. When you will transfer the assets and liabilities from balance sheet, you can't transfer partner's loan. So kindly write it down as important note. Then what you have to do? Partner's loan account you will prepare separately. There this partner's loan will go and you will show the payment in case business has taken loan. Otherwise we will show in some other way if partner has given loan. Okay. So in either case partner's loan account will be prepared separately if any partner has given. But if partner's wife or partner's brother or partner's relative has given loan to the business, then it's liability, external liability only, that you will transfer in the realization account, credit side of realization account, that you will consider as liability and you have to transfer. So be clear with the concept, kindly write it down. If any partner has given loan or taken loan, that will come separately in partner's loan account. You cannot transfer that in realization account. But it may be partner's wife, partner's brother, partner's relative. That is external liability only. So that should be shown in the credit side of realization account as other liabilities. Is this concept clear?
Yes, ma'am.
Yeah, so write it down in your own words. Okay, now move to the question. So if you see the liability side, creditors, bills payable, G is loan. So G is loan means G is partner, DGT. So that will not come here. G is loan, you have to prepare a separate G is loan account. There you have to show that and show the payment. And it is in the liability side means business has taken loan from partner. Now R's loan. Again, don't get confused. DGT, only these three are partners. R is external person. So this you can transfer in the realization account. WCR means workmen compensation reserve. We will see any adjustment is given or not. Then capitals. Capital will go in capital account. Partners capital account. There you have to write the capital balances. That will not go in realization account. Come to the asset side. First always you have to empty the balance sheet in dissolution. So you have to prepare realization account. So in realization account, if you see in the liability side, what items will go, what item you will transfer in the credit side from liability. By creditors you will transfer 50,000, by bills payable 10,000. G's loan will not come, by R's loan 12,000 you will transfer. WCR we have to see. So now asset side, bank will not go in realization account, you have to prepare bank account separately. Debtors will go. So in the debit side of realization account you have to write to debtors 30,000. So prepare realization account, partners capital and G's loan account. Be ready with the format and also bank account. So be ready with the format so that you can just do the posting. Realization account, partners capital account, G's loan account and bank account. First prepare the formats of all these.
Yes, ma'am.
Okay. Now we are going to empty asset side of the balance sheet. You have to see the items. As I told you, bank will go in bank account separately. By you can write like to balance BD. When you prepare bank account to balance BD 26,000 you can write there. Debtors you can transfer in realization account, so transfer it. Realization account debit side to debtors account 30,000. Stock, that also realization account debit side to stock 20,000. Furniture transfer it to furniture 15,000. All will come in the debit side of realization account. To land and building transfer it 2,45,000. So then G's capital account. Again who is G? G is our partner. And his capital account asset side it is given. Normally capital accounts always we see in the liability side. So when we prepare partners capital account, in the credit side of partners capital account, we used to write by balance BD and we used to write respective amount in their columns. Now G is also a partner, but you are seeing that his capital account is given in the asset side. So what you understand? It means now you have to write G's capital in the debit side of partner's capital account. So write it down, partner's capital account debit side to balance BD. DT, both of them they have credit balance. So you have written in the credit side by balance BD, D and T. But G you have to write in the debit side because that balance you are seeing in the asset side of the balance sheet. So it is debit balance of capital account. To balance BD, in G's amount column write it down 20,000. Till here it's clear, Pavitra?
Yes, ma'am.
Okay. Now the firm was dissolved on the above date. Okay, that is 29th Feb 2020. Firm was dissolved. The business came to an end. Business was closed. Now what are the adjustments given? Debtors realized 28,000. Means from debtors business got 28,000. Then what will be the journal entry? Journal entry will be bank account debit to realization account 28,000. So in the credit side of realization account you can write by bank 28,000 and in bracket you have to write debtors. From where you got 28,000? Debtors. So in bracket you can write debtors. And bills payable were paid at a discount of 10%. Bills payable is a liability. So that liability has been paid but at 10% discount. So how much cash payment was done by the business? You have to do the calculation. How much bills payable? 10,000. So you have to calculate 10% of 10,000. When you do the calculations, it will come I think 1,000. So bills payable 9,000 has been paid by the business. Now what will be the journal entry? If anything is paid by the business, realization account debit to bank. So in the debit side of realization account, I am telling you the journal entry also, so that if the question tells you to pass the entry, you have to pass. Journal entry format you all know. Date, particulars, ledger folio, then amount, debit, credit. Then like this each and everything you have to write in form of journal entry. So now what will be the journal entry? If bills payable payment is done, realization account debit to bank. In the debit side of realization account, write it down to bank. In bracket you can write it down creditors. No creditors, I am really sorry. Bills payable 9,000. At 10% discount we are making the payment. So 10,000 is the total amount of bills payable. 10% discount we are making the payment. So you can write it down. And one more important concept, as I told you, like in other chapters, reconstitutions of other chapters, what we used to do, if any profit or loss on assets liability, we used to show that in revaluation account. Here we have nothing to do with any profit, any loss on assets or liabilities, payment, anything. Just you have to see how much cash coming and going, that's all. How much payment is made, how much assets realized. That amount only you have to show. So that is why this 1,000, even though it's a profit for us, but we can't show in here. Realization account we can't show. So just how much payment you made, that only you have to show. So to bank account, bills payable 9,000. Understood?
Yes, ma'am.
Okay. Now the next, second adjustment. Stock was taken over by T. Who is T? You have to see. DGT. Okay, T is also our partner only. So partner is taking asset for rupees 15,000. What is the value of stock? The stock value is 20,000. A partner T, he is taking the stock for 15,000. Again, as I told you, we have nothing to do with profit or loss. So just you have to see for how much the partner is taking and you have to record. Now what will be the journal entry if any partner takes any assets of the business? So partner's capital account debit to realization account. This will be the journal entry if any partner takes assets of the business. Here T is the partner who is taking the asset. So T's capital account debit, because T needs to make payment to the business. From where he will make the payment? Out of his capital. So his capital will be decreased when he does the payment. That is the reason you are debiting partner's capital account, because he is taking assets, means he needs to make the payment to the business. So T's capital account debit to realization account. Come in the credit side of realization account. Write it down. By T's capital account 15,000. T is taking the stock for 15,000. 15. You have to write the amount for how much partner is taking. Done. Yes, Pavitra, done with the question, dear.
Yes, ma'am.
Okay. Now the next. And furniture was sold to N. Who is N? Okay. N is not a partner, because when they are giving in capital letters, you should be very alert whether he is a partner or external person. So N is outsider only. To make you confused, they are doing this. This is board question only. So just read the question carefully. And furniture was sold to N, because by reading N, some students, they may get confused, he is a partner, and may do a mistake in passing the entry. But N is not our partner. He is external person only, to whom furniture was sold for rupees 12,000. So now what will be the entry for selling furniture by the business to N? The entry will be bank account debit to realization account. So come in the credit side, you have to write by bank account 12,000. In bracket you can write furniture. By what you got 12,000? By selling the furniture. In bracket you can write it down, furniture. Now the next, land and building, third adjustment. Land and building was sold for rupees 2,80,000. So land and building is an asset. It has been sold for 2,80,000. Again, what will be the journal entry? Bank account debit to realization account. Come in the credit side of realization account. You have to write by bank. Amount column 2,80,000. Bracket land and building. Understood?
Yes, ma'am.
Yeah. Now R's loan was paid by a check for the same amount. So R is a partner. He has given loan to the business 8,000 rupees. Now loan payment is done by the business. So come to G's loan, R loan. I'm sorry, it's R loan. R is not a partner, right? R is external person only. I myself got confused. Okay, fine. So R is external liability. So for that, what journal entry you will pass? Realization account debit to bank account. So come in the debit side of realization account, write it down to bank account, in bracket R's loan. How much? 12,000, right? 12,000. Because 12,000 loan has been given by R to the business. Now we are making repayment of loan. The same amount. That is 12,000. Got it?
Yes, ma'am.
Yeah. Till here you wrote everything, or you need some time to write it down?
I wrote, ma'am.
Okay dear, fine. Now, okay, this one done. Fifth adjustment. There was an unrecorded asset of rupees 1,50,000 which was sold for rupees 1 lakh. We have nothing to do with unrecorded asset. But if it is sold, cash is coming. We have to deal with that only. So now what will be the journal entry if we are selling any unrecorded or recorded asset? If we are getting cash, you have to pass the entry. So cash or bank account debit to realization account. In the credit side, write it down by bank account. In bracket, you can write it down unrecorded asset. How much it was sold for? 1 lakh. Write it down, 1 lakh. Done?
Yes, ma'am.
Yeah. Now see, compensation. Yes, workmen it is given. Compensation to workmen paid by the firm amounted to rupees 20,000. How much compensation was paid to the workmen by the firm? 20,000. So when we are doing dissolution, what I said, if workmen compensation reserve is given in your balance sheet liability side, see the adjustment, how much claim, because always in realization account you have to show the claim as liability in the credit side, then you have to show payment of that claim in the debit side. This is the rule you have to follow while doing dissolution. Here WCR is given 26,000, but in adjustment how much claim is given? 20,000. So 20,000 as liability you have to first show. So if you are showing as liability means you are transferring 20,000 as liability in the credit side of realization account. So you can write by workman compensation claim, you can write, or reserve, whatever. By workman compensation claim you can write 20,000. Then come in the debit side of realization account and immediately make the payment. So realization account debit to bank. You can write to bank 20,000. Claim paid. Whatever the worker demanded, their claim has been paid by the firm. Now after this, what the question asks you, prepare realization account, bank account, capital account of D, G and T. So everything we did. Now we are going to what? Do the calculations, and you have to see whether any asset is not given in the adjustment to be sold. As I told you the concept in previous class, you have to check each and everything. Suppose in adjustment any asset is missing, they didn't say about the selling, you have to sell the tangible asset at book value. Tangible I am saying like land and building, debtors, furniture, fixture, plant, machinery, all these are tangible. Intangible like goodwill, copyright, trademark, patent, those you can transfer in realization account. But if the question does not tell you about the selling, selling details, you can't sell at book value, just leave it. This is the rule you have to follow in dissolution. So here you have to check whether each and every item which we have transferred from balance sheet has been sold or not. Like data, stock, furniture, land and building, everything you have to check. If anything missing, you have to sell at book value if not given in your question. Same rule applies for liability. Liability means external liability. External liability means there should be some person to whom business should make payment. For example, if provision for bad and doubtful debts, that we can't make the payment. Business will make payment to whom? That is the fund created out of the profit to compensate the loss arising because of bad debts in future. So that will be with the firm, that you can't make the payment. Like that you can't, like any reserve, any fund, that you can't make the payment. But suppose creditors, bills payable, bank, loan, financial institution has given any loan, bank overdraft, all those are external liabilities where you have to make the payment to some person. So you have to see whether all liabilities are paid or not. If any liability is missing, you have to do the payment at book value. So you should be very alert while doing dissolution question, because if you miss anything, then question may not tally. Bank account will not tally, because in this chapter bank account will tally automatically if you do the question properly, like doing all the payments without missing, realizing all the assets. If you do, the bank account will tally automatically. This thing you should keep in mind while doing the sums. Okay.
Yes, ma'am.
Yeah. So now realization account, you have to calculate whether profit or loss. You know, this is simple ledger. Just make sum total of credit side, make sum total of debit side. You will find that credit side is more than the debit side. So credit side will be 5,27,000. Then debit side will be 5,27,000. Before that, add all the items of debit side like 30,000, 20,000, 15,000, 2,45,000, 54,000, 12,000. All these 20,000 you have to add in rough. Then just subtract from 5,27,000. Then you will get profit 1,31,000. This amount of profit you will get on realization account. Now this profit will be given to the partners in their ratio. So who are the partners? Partners given in our question D, G, T. Their ratio is not given means they are equal partners. If ratio is not given, we have to treat them as equal partners, divide it equally. Okay, 1,31,000 divided by 3. So you have to round off 43,667 43,667, 43,667. If you round off, then only it will come 1,31,000. Till here, any doubt? Pavitra, you are having any doubt?
No, ma'am.
Okay, fine. Now we are moving to partners capital account. So as I told you, by balance BD, write it down. Two partners, they are having credit balance. So D and T, write it down. 1 lakh rupees. D is having 1 lakh and T is having 1,50,000. Write it down in the amount column. Credit side. Then in the debit side, one partner is having debit balance. Asset side, G's capital 20,000. So partners capital account, you have to write in the debit side. To balance BD, G amount column, write it down 20,000. Then what you will write? You have to write the realization profit. You have to give to all partners. So write it down in the credit side. By realization account, in bracket you can write it down profit. Then the amount 43,666, 43,667, 43,667. In the respective amount column you can write it down. After that, see WCR. WCR 26,000 created by the business. Out of that 20,000 there is a claim. So remaining 6,000 that we have to distribute among partners in their ratio. So 6,000 equal ratio. 2,000, 2,000, 2,000. You can write by WCR 2,000, 2,000, 2,000. It's better to write the full form, dear. Just try to avoid writing short forms. Teacher may cut your marks. So write it down. Workmen's compensation reserve. Always write the full form. Don't use like me, WCR and all. Don't write. Write the full form. So 2,000, 2,000, 2,000. Now after this, if you see the realization account, you can find that one partner T. Okay, T has taken, in question in adjustment also they said na, T is a partner who took the stock for 15,000. So you have to debit T's capital account, you have to write to realization account, and in T's amount column you have to write 15. T will pay 15,000 to the firm out of his capital. That is why you are debiting his capital account, because you know the concept. Whenever any partner pays anything to the firm, partner's capital account should be debited. That's the reason you are debiting. When the partner is taking asset free of cost, he can't take, na? He needs to make the payment. So his capital account will be debited. Till here any doubt?
No, ma'am.
Okay. Now after this, you have to settle partners' accounts. Business is closing, so whatever their balance is, business will make the payment to bank. So just as usual, simple ledger, you have to add total of credit and total of debit, then subtract. So in this way, total of credit side of T 19566, 1,95,667. From there, if you see the debit side of T, 15,000 he needs to make payment to the business, subtract 15,000, then the remaining balance T will get from firm. So to bank account, T's capital account debit side, how much he will get? 1,80,667. Business will make the payment, final settlement. Now what about G? G also you have to do the credit side total. 45,667. Write both the sides. Debit, credit, total amount column, write it down and close by putting double underline. In the debit side I have not written. You kindly write it down and put the double underline. Close the account. So 45,667. Just see in G debit side capital account, anything is there? 20,000. His debit capital balance is there. You have to subtract that 20,000, the debit side amount of G. So finally he will get from firm to bank 25,667. This amount G will get from firm. Now come to D. Just see how much he is having in his credit side. So 1,45,666. Write it down both the sides. and D, he is having nothing to be reduced in the debit side. So he will get from firm 1,45,666. Yes, any doubt, Pavitra? You are having any doubt?
No, ma'am.
Okay. So close the account by putting double underline. Then come to G's loan account. If you see the liability side of the balance sheet, G is our partner. He has given loan to the business 8,000. And loan means it's a liability. So when you prepare partner's loan account, particular rupees, debit, credit, this format. In the credit side, you have to write by balance BD 8,000. Now this 8,000 you have to show the payment to bank account 8,000. In this way you have
Excuse
to
me, ma'am.
Yes, Pavitra, tell me dear.
Ma'am, can you share page 9 again? Because some part is cut.
Sure dear. Page 9 and 10.
No, only 9, ma'am.
Okay, sure. Just a moment. I will share. Now it's clear dear. Check it.
Yes, ma'am. Thank you.
Yeah, welcome. So now what you have to do, prepare G's loan. G is our partner. You have to write in the credit side by balance BD 8,000. In the debit side you should show the payment. Firm is making the payment to G to bank account 8,000. Now close his account. 8,000, 8,000 debit credit both the side. Put double underline in order to close the account. Till here any doubt?
No, ma'am.
Okay. Now bank account. We are going to prepare bank account. Bank account should tally automatically. So just by seeing the realization account, partners capital account and also the loan account, you have to do the posting. Wherever you find the bank, you have to do the posting. So, and bank account, what is the concept? Bank is an asset. Whenever you are showing any item credit side of bank account, it means payment. If you are showing anything in the debit side of bank account, it is the receipt. You are receiving by selling the assets, or you are receiving from debtors, or suppose business has given loan to any partner, from them business is receiving in this way. So debit side of bank account means we are receiving those amount. Credit side of bank account shows we are making the payment, maybe to creditors, bills payable, bank overdraft, okay, to any person outsider we are making the payment. So partners also, at the time of final settlement, business will make the payment in this way. So just you have to see and do the posting. And asset side, always we are having that balance BD in balance sheet. Cash at bank is there 26,000, write it down. To balance BD 26,000. Then see buy realization 54, buy realization arts loan 12, buy realization that WCR paid 20,000. See the realization account and do the posting. Then by G's loan also we made the payment 8,000. Then what we did, we made the payment of 3 partners, that final settlement DGT. So see that how much payment has been made. 1,45,666, then 25,667, then 1,80,667. Write it down all these amount in the credit side of bank account. We are taking this amount from capital account of the partners. After that, come to the debit side of bank account. To realization 28, to realization 2,80,000. Land and building, we realized from land and building 2,80,000. To realization, some unrecorded asset we sold and received from them 1 lakh. In this way, when you do, automatically see no balance CD BD means no balance CD BD you have to write. you will see that automatically 4,46,000 coming both the sides. When bank account tallies in dissolution, it means your question is correct. Understood, Pavitra?
Yes, ma'am.
Yeah, that's all for today. In the next class, we will do the next question, okay?
Okay, ma'am.
Yeah. Thank you, dear.
Thank you, ma'am. Bye. Good night.
Bye. Good night.